When I was putting together this course, I wanted to make sure that it was useful and relevant to you as an artist. I also wanted to make sure that it was going to be engaging and exciting. And what could be more exciting than taxes? Specifically through the lens of artists as they interact with the tax code. We'll briefly go over how tax brackets work, the fact that you are, for tax purposes, a small business as well as an artist. I'll give you a heads up to account for self-employment tax. We'll talk about whether or not you want to do quarterly taxes. Do you have to file 1099s? The distinction between itemized deductions on your 1040 and business deductions on your Schedule C, the kind of considerations that you want to make to account for those business deductions, and why Schedule C is your friend and you want to go ahead and file it. A big giant disclaimer. This is general information based on my individual experience. You deserve specific advice based on your individual situation. Please don't sue CSU. Get help and work with a professional. We're just going over the general idea. One of the biggest misconceptions about taxes is that most people don't know how tax brackets work. If you've ever met somebody who said they didn't want to earn extra money because it would push them into a higher tax bracket, they didn't know what they were talking about. You pay taxes in chunks. And yes, there are different rates based on how much you make, but the rates only apply to the income in that range. So for example, for single individuals, a tax rate of 10% might apply to income that you make up to and including $9,875. If you are earning between $9,876 and $40,125, that amount, but not the earlier $9,000, is going to be taxed at 12%. If you earn between $40,126 and $85,525, that amount of your earnings will be taxed at 22%. And if you earn more than $85,000, there are other tax brackets, but more importantly, would you like to buy a painting? So if those are the brackets and you earn $30,000, you're not going to be paying 12% on all $30,000 of it. Your tax bill is not $3,600. Your tax bill is going to be 10% of that first $9,875 and then 12% of the remaining $12,125. And you add those together and you'll only be paying $3,402.50. The good news is that all of this is before you even account for the standard deduction. You can take roughly $12,000 off of your annual earnings because the government knows that you need to eat a little bit. It's always worth it to earn that extra dollar, even if, you might have to pay 22 cents of it to the government that keeps you safe. As an artist, you are a small business. Most likely you are a sole proprietor. You are the one who has a financial stake in your success as an artist. This is true even if you haven't registered your business. You can register your business to get an employer tax number so that the state of Colorado knows what you're up to, or perhaps because you want to form an LLC or other corporation to protect your family's assets. So while you don't have to register your business to be a business, you do have to pay taxes. Income tax on the amount of profit that you earn, sales tax on any products that you sell, and depending on where you live, that can include state, county, or city taxes, and then the self-employment tax that we'll talk about in a minute. As a small business, you can expect to use several forms with the IRS. One, you'll need to file your taxes with the 1040 form so that you can attach Schedule C, where you outline your income and expenses as a small business. It's possible you'll also be filing Schedule SE, which is for the self-employment tax. If in the course of your business you paid someone $600 or more to do something for you, then you'll need to give them a 1099 and file it with the IRS. If you have a complicated home office situation, you might also need Form 8829, though many of us can do that math as part of Schedule C. Same thing with business mileage. There's a worksheet on the second page of the Schedule C form. Otherwise, you'll be filing Form 4562. So what is this self-employment tax? It's not a way of taxing you just for having a business. This is you doing what your employer already does for you, which is to pay into Social Security. You might have noticed FICA coming out of your paycheck. What you might not have known is that your employer is matching that. So you're actually paying twice as much into the Social Security and Medicare systems. When you're self-employed, you have to pay both halves. So you should be prepared to pay self-employment tax on any profit you make as an artist. This will be 15.2% on top of whatever income tax you pay for the profit you make in your business. Sometimes artists wonder if they should file quarterly taxes. There is a penalty for not paying your taxes on time. You avoid this as an employee because your employer takes the taxes out of your paycheck every time. If you're self-employed, and as an artist you are, then in theory, you would want to pay taxes throughout the year, especially if you're going to owe more than $1,000 in taxes. Not that you earned more than $1,000, but that your tax bill is $1,000. You could file more frequently, but a lot of artists will file quarterly taxes or simply pay taxes whenever they earn a large amount at any point during the year. 1099s are a reporting form that lets the IRS know that somebody's been paid. If, as part of your art business, you pay somebody at least $600, then you should send them and the IRS a 1099. You'll explain how much you paid and for what service. If you got paid $600 or more for performing a service for somebody, they should send you a 1099. Even if they don't send you the paperwork, make sure that you declare the income on your taxes. You don't want to get in trouble with the IRS because you left off the speaking fee from that workshop